The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 3rd. Got to remember what day. Boy, time absolutely flies. But this is the March 3rd terrific or Taco Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary day. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. We've got call-ahead seating. If you can't dial in, we've got you covered there, too. You can let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got all the indices in the green, with the exception of the spot volatility index. No surprise there. Dow 489, S&P 49, NASDAQ 145, Russell 17, semis 27, New York Stock Exchange 159, Wilshire 484, Trandy's down 135, NASDAQ Composite 137. Spot volatility index up nearly 6%. Trade out at 35.29. You've got gold up nearly $52, trading at $16.46. Silver up 50 cents. She's trading at $17.23. Light sweet crude up 34 pennies, trading out at $47.09. Natural gas is up nearly 6 cents, a little over 3% to the upside. Looks like that has bottomed. Treasuries up 22 ticks right now. The 30-year trade down at 172 and 29 seconds. Dollar-wise, leading the charge the upside. It is Credit Acceptance Corp, the old GMAC, up $22 or 5%. Credit Suisse Nassau is up $17 or 11%. Tesla up 15. Mettler Toledo 15 to the downside. Booking Holdings, that's 53 buckaroonies to the downside. Chipotle's off 32. Google's down 17. So we've got plenty to look at. And let's go take a look at the equity markets out here. So we've got a couple questions that have come in. First, let's just begin by taking a look at the S&P 500. So if we take a look at the S&P 500, here, what we are going to see is what's transpired today. And I've got a couple of lines out here. They're important lines, but let me just turn them off just to clear up the chart. Make sure that, so where's Stevie got those trend lines? There's a horizontal line. We don't need that. And we've got that trend line. We can turn that back on later. So we're just taking a look at from the activity, the low on Friday, to this morning's high out here. What we can see is the retracement so far very mild, very muted. I know it seems like a lot of points, but we're talking about large moves out here. And what we have is a retracement back to the 0.382 level. That's all that the S&P does. This could be setting up a fairly large A to B equals CD to the upside, gets us back actually to the highs out there, which is the only way that I can really explain the following. So we're taking a look at the S&P, but I'm going to navigate back and forth in between the equity futures contracts as well. So here we're just simply taking a look at the ES Mini. And it's really the left-hand panel screen. Here you're taking a look at daily upper left, weekly upper right, monthly lower left, quarterly lower right. So first, let's stop here. With regard to last week's decline stopped at support. Support where, Steve-O? The top of the monthly profile, the top of the quarterly profile. What that tells you and I, what this suggests to you and I, at this stage of the game, at least on March 3rd here, is all that we may have going on here is a large consolidation. with Friday's low at this stage of the game being the bottom of that consolidation. Probably doesn't hold eventually, but most likely we're looking at a consolidation pattern out here. You've got two long-term areas of support that have held. Now, in the daily time frame, we talked about this yesterday. I reached to outside sources. Who are those outside sources? I said, hey, Johnny Logan, that is. Have you ever seen such a wide profile? I'm going to turn price off here. Have you ever seen such a wide daily profile? After all, he developed the software. He would know. And his answer was, no, I haven't seen such a thing. Don't even know how to figure this one out. Because if you take a look at the profile, you're looking at really the blue numbers on my screen out here on the right. The bottom of the box, 2907. The center is 2962. And that is much closer to the bottom because the top is above all daily profiles that have ever existed out here, 3397. That is a huge range. Now, if we were just forget about what's transpired over the last several days, just for a few moments out here, if you and I were just simply going through profiles, one of the things that we want to do is be able to identify bullish profiles and bearish profiles because they assist us in our trading. Here we've got a bullish profile, because that center line, which is where both buyers and sellers believe fair value exists. You've got buyers there and some sellers, but you have only buyers at 2907, the bottom of the box. That's why Stevie says this is bullish in structure. Now, what typically occurs when price gets well enough above the center of that box in a bullish profile, and this is why I'm amazed, that's why I reached out to John to say, man, have you ever seen this out here? Is because once price does that, typically what will happen is buyers will be able to push price up to resistance. And that's the top of that profile at 3397. So how can that possibly be? Well, the only way I can answer that, well, I can't answer that. I've just come back and take a look at today's activity, for example. When we take a look at today's activity, at least thus far, as of 113, only a 0.382 retracement. Now, that could set up an A to B equals CD pattern. Here, let's try to draw that in. The A point out here is going to be the low of Friday. Now, in this case here, let's see if the software will allow me to do this. I've got a set of software that will. I have to use as my B point. I've got to use the high of today, and then I have to use the low of today for my C point out. Let me see if this will grab it. Yeah, sure enough, it does. So what you can see here, and I don't know whether today's low is the low out here. We just know just simple retracement work out here. We'll go take a look at some other things. If it is, the 1-to-1 A to B equals CD gets you up to 3307, and the 1-to-1 0.272, 3384. Voila. There is your answer, or there is my answer with regard to can the ES Mini really get up into that 3397 level out here? Well, one thing I can share with you with certainty is that if it does, that at least would help us to set up the consolidation top. You can see the consolidation bottom. Again, now I'm looking at the ES Mini. I'll just simply draw in that large rectangle out here. It actually makes a lot of sense when we see that width of that profile with regard to the activity that we're seeing, for example, that we've seen here today. But this could be the actual consolidation that the market is in for quite a period of time to come. Maybe even through the election, maybe even beyond the election process. Steve Rhodes with TFNN. John, to answer your question, we are bullish the S&P 500 in the newsletter. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's go to a couple of questions that have come in. This one here from Leonardo. And Leo wants to take a look at, I recently bought J-Nugget, J-N-U-G. That's one of the ETFs for the gold miners out there. And sold this morning at 65. Right now trading out at 67.26. So nice trade there for you. Can you project a retracement level for repurchase? Well, it's moving higher. What's likely to occur out here, Leo, with regard to the junior nugget, it's likely to go tag the 72.46-ish area. Yesterday, when we were talking about the markets, we were looking at some of the indices. Well, in fact, we'll go take a look at the New York Stock. We'll do that during this segment here. First, let's take a look at JNUG, and then you'll see the exact same thing out there. Which is, well, first, here's what we're looking at here. This is different than the New York Stock Exchange. But see Stevie's green line, the oscillator and change line, when it changes color from green to red or red to green, tells us that the price oscillator is at the 0 level. A price oscillator, the difference between its 39 and 19-day exponential moving average. Now, there's an odd phenomena that occurs there. I can't explain to you why it occurs. I just know that it does occur. I can't really tell you how electricity works, but I know that it does work, and I use it all the time. So, therefore, here you've got the same thing. And when that line changes color, it tells us of an impending move between price and that line, and that they will catch up to each other. It's like they've got to meet and greet. Now, in this case here, so now that number is going to change. I can say it's 72.40. If you're watching live, you'll see it changing by a penny or two. So you've got to use that as a price gauge or range out here. But you're likely to see price get up to that level. Now, if price can close above that, well, that's even more bullish. You have to wait to see what the test results reveal, because if price can go above it, then you're looking at 81.91 out there. So now is not the time for me to be able to give you a retracement level. I don't have anything to really be able to go back to on the daily time frame. And at this stage here, the patterns are suggesting that it wants to move higher before it moves lower. But don't fret. Nice trade out there. You've got 20 some odd dollars, $22 or so on that trade. So kudos to you. And thanks for writing in. Now, I mentioned the New York Stock Exchange because John of the Tiger's Den was trying to say, hey, how do I take a look at my daily activity and try to provide subscribers with a gauge as to what the markets are doing out here? Well, if we take a look at the New York Stock Exchange, so I'll do that. Some believe this is a great tool to figure out the overall market breadth out here. You and I know that we use about a handful of patterns, and truly a handful. One of those patterns to identify tops and bottoms, or potential tops and bottoms, is that TD9 count. Well, if you take a look at Friday's action inside the New York Stock Exchange, it was bar number 9. Bar number 9. We can also see that its green line is now red, changed colors 4, 5, 6 trading sessions ago. This is suggesting to you and I that we should see price and that line catch up to each other before it really reveals to us what its true intention is. Now, what's interesting about most of the market versus, let's say, I got to come back here and put up the NQ. Well, easy enough to do. So let me put up the current contract here for the NQ. And what you're going to see is its green line has never turned color out here. It means the price oscillator for the NASDAQ is still above 0 out here. But it's going through these retracements. Inside the NASDAQ, it doesn't have that bottoming signal. But one of the weakest indices that did, John, and others out there. If you take a look at the 9s, you'll see that the Dow Equity Futures contract form a nice hammer candle and a TD9 count pattern out there. And we can also see that its green line has turned red out there. So still looks like we should see that test. Now, I had made a statement earlier that said, the lows were likely to see some type of a consolidation pattern unfold. Now, you and I were taking a look at a bigger picture out here. And what I also said is that the lows probably don't hold. Now, you might say to yourself, how in the Sam heck can you say that? So I've heard two people in the last 24 hours say something. One was yesterday as I was driving to a dental appointment, and somebody was talking about entries into the markets with regard to spot volatility index. You know how fond I am of using the spot volatility index out here. And both people have said, I'm just looking for the tool out here. Where did I put it? Maybe right here. There we go. Both people had said that when the spot volatility index hits, they start looking at it in terms of the 40 and 50 price level out there. And folks have said when it gets to 50, it's an automatic buy. An automatic buy. And I'm kind of like, wow, geez, that's pretty cool because, you know what, I hadn't actually looked at it that way. It wasn't a tool that I used. By the way, the high on Friday for the spot volatility index was, where was it? It was close to that level. It was 49.48. Rounding, we'll go ahead and give it that 50 out here. But you'll see I've got a line going across 48.20. That happened to be a high from back in May 2010. So I heard it a second time. I said, you know what, third time is the charm. I've got to go check this out. Now, the bottom of my screen, by the way, if you take a look at the actual, first of all, that's a fallacy because it falls apart when you start pulling the stock charts back, because if you go to October 23rd, the actual high in the spot volatility index was 96.40. So, you would have gotten crushed if you had bought it at the 50. That was the first thing. But I said, okay, maybe these folks, they don't really go back that far to take a look at their historical data. And so maybe they're just really starting with the highs in the spot volatility index back in May 21st. So let's do the same thing that they apparently it did. But if they did, I'm kind of looking at this saying, what did you do? Now, granted, the bottom of my S&P chart here is on a closing basis, so I'm more interested in this case here on a closing basis than I am intraday spikes. And maybe the intraday spike on this day actually did hit the low. I don't know. But this day's from a closing base. I'm like, hey, if you're going to close lower, you're closing lower. Now, take a look at that high spot volatility index the day of May 21st, 2010. That had gotten up to a high of 48.20. And if my green arrow shows you where that bottom was, supposed bottom, what we can take a look at is really the bottom didn't come in here until July of 2010. Now, there was a divergence, price moving lower, spot volatility index making lower highs out there. I see that. But to suggest that you get up to close to that 50 level, it's an automatic buy. Hello. Well, wait, Steve-O, that's just one example out here. So let's go test it again. We'll take a look at this situation. Situation being what? August 8th, 2011. On a closing basis, we can see that, in fact, price did pretty well up until it got into the October timeframe. Of course, we know the markets will make a low in October, usually around the middle of October out there. But yet, the point here that I'm making, it really made a lower low. There was a lower closing low in the S&P 500 versus when the spot volatility got up in that 48 level. So now, of course, that makes me say, what in the Sam heck are these guys peddling, or what is Stevie doing wrong out here? I don't know. I'm just taking the data that people had suggested, going back and testing it to say, man, if that really is the case, boy, wouldn't that be beautiful? Well, let's come back and take a look at the next occurrence out here. The next occurrence, August 24, 2015. Did we see a lower low? Yeah, and this was during a consolidation period, too. We most certainly did. That lower low came in February of 2016. So how is that going to be any different than this one out here? Oh, we're going to break, but just take a look at the one in 2018. We also saw a lower low, or at least a consolidation for quite a while. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So look, the point that I was trying to make out there is, you may hear something as I did, and certainly and one was on Bloomberg TV, the other was on CNBC yesterday. And so, I heard it twice, and I said, well, geez, maybe, I believe the spot volatility index used properly can really help us out there. And when I heard that comment about in the 40s and in the 50s, and especially those that got up to the 50s, they were automatic buys. I said, well, geez, I've got to go check that out, especially since Friday's signal was up towards that 50 level out there. My point is, do the work yourself. In fact, when you hear me say something, please go do the work yourself. Maybe I've overlooked something out there. Just simply do the work yourself. I think that's a good idea out there. At least go test it is really, in essence, what I'm saying out there. Now, we had a request come in from one of our listeners, Sylvia, and Sylvia wanted to take a look at Rite Aid. So Sylvia has, let's put up let me put up my Ninja Trader charts with all the tools on them and read Sylvia's question. I bought a call in Rite Aid at 1377 after using my technique. Please confirm if what I saw and what you can see by technicals, and if you see further upside with volume and volatility, it's important to take a step back and be sure what a successful trader should see in the move. Thank you, Sylvia. Okay, so Sylvia, you bought at 1377. I'm not sure the entry point, but let me just share with you what I see in the charts when I take a look at the daily time frame, and why perhaps Rite Aid today stopped at around the 1735 level, because that's what you saw. And that really was your resistance area. And that resistance area was established by that TD9 count. And so my system automatically draws that across the screen. So it should be no surprise to you, me, or anybody else that even though it was a nice move up, it was moving right into resistance out there. Now, what I can't do is tell you whether or not price is going to be able to clear resistance. We just know that's resistance out there, and we have to watch how price behaves when it gets there. And Sylvia, what we know right now is price has stopped in that area. So you're in the money. I don't see anything bearish about this other than price could just simply be consolidated between 1735 and 1177. That's its TD9 count breakout support level out there. As long as price remains above the top of its profile, 1506 and 1486, Stevie's green line, maybe this is just setting up a recoiling and it's going to try to bust through there. You said that they were about a call in Rite Aid, so I don't know when the expiration is out here. All that I can share with you from a daily perspective, a nice trade, by the way, is that price hit resistance. And that may have been where you'd wanted to exit that call option trade by having, an OCO type order out there, if your system would allow that. And a lot of times those OCO orders will allow you to say, hey, at 1735, you're going to go ahead and exit the trade. And then the OCO, meaning at the bottom, you had some kind of stop in place as well. One cancels the other. So that's what the daily time frame chart for Rite Aid shows us. On the weekly time frame out here, things look bullish. Resistance out here is really 1860 to 1732. That's your range out there for Rite Aid. On a monthly basis, Sylvia, let's populate this. What do we see? Not much. So the monthly is not going to help us, but the daily, if you're wondering why did price stop where it did, you now know, using those tools that we like to use to understand where both sellers and buyers are, or the breakdown and breakout levels are. And inside Rite Aid, that's simply easy to see and easy to see how it actually worked out there. Now, with regard to the equity markets out here, this morning when I sent out my newsletter, what I shared with clients at that stage was an intraday perspective, what was likely to occur during the day. And what I had suggested was that we would see the markets top between 9 and 2. I couldn't pinpoint the exact time, but as I said, markets are going to top between 9 and 2, and now is not the time to add to any positions out there. Now, why would Stevie say that? Excellent question. The reason that I had shared that with clients this morning was simply because, look, when we take a look at the NQ, which at a 5-hour time frame out here, and it was a 5-hour time frame, why I said that, formed a beautiful wave number 7 bottom out there, courtesy of Basil Chapman's wave counts out there. Now, what Stevie likes to look for is that 7th wave. That's the letter G on my screen out there. Now, what's interesting, as on the 5-hour time frame out here, we got a nice big old bullish reversal candle. That was on Friday. That was before the close because cash markets are coming to a close. The futures markets were still open, and price was able to clear Stevie's red line. Once it closed above Stevie's red line, that was a signal to you and I that what price wanted to do was to continue to move higher. And even after Sunday evening's gap to the downside, price was able to still close on that 5-hour time frame, which is 11 o'clock in the evening. You open at 6, the 5 hours is going to be 11, then it's going to be 4 a.m., 9 a.m., 2 p.m., rinse, recycle, start that over again. Well, the reason why I suggested we would see some type of short-term or temporary high out there was because of the TD9 count out here. And that's, in fact, what took place. Some of that movement that we saw this morning to the upside in the markets, back to the downside, to the upside. Now we're experiencing the downside out here. By the way, in the 5-hour time frame, as long as price remains above Stevie's red line right now, that's 85.5462, is the market bullish or bearish? Exactly. Still bullish based upon using the 5-hour time frame chart. If price closes below Stevie's red line, by the way, that's 85.54, that says a further retracement. Retracement to where? Then where would you target the retracement? Exactly. You got this. This is a game of just simply, you can call the markets for any time frame, for any symbol. Doesn't matter what we're looking. We're agnostic. These tools here, you just take a look at those lines, or just pay attention to the 9 counts out there. Identify breakout support. Which, by the way, where would price pull back to? You answered it. You pegged it, and that was 82.1575. That's the breakout support on a 5-hour time frame inside the NQ. So all this backing and filling that we're seeing out here, so far nothing has broke down. Not on the 5-hour time frame chart out there. Now we had a request inside the Tiger's Den from Peak D to take a look at a couple of different things out there. So let's get the charts here going. Let me get rid of this 5-hour NQ chart. Let's pull back Stevie's other charts out here, and then Stevie's got to figure out what symbol is it that was requested. Well, I can do that. Let me just expand one of my monitors out here and see what Peak D asked for. Peak D asked for, where is it? A lot of postings in here. Okay, give me a minute. Sorry about that. Geez, Peak, I can't find it. What is it that you wanted to look at? Oh, there we go. OMER. OMER is the ticker symbol. I don't know what it is. It doesn't matter what it is out here. We're just simply going to do the technical analysis as to where price is headed to for this. And look how this is sold off. And I did go ahead and send a message into Peak earlier, who had posted this, to say, hey, where is, because this question was buy, sell, or hold. And so if we take a look at where is the likely resistance level for ticker symbol OMER, 1861. Now, price didn't get up to 1861 today, but we know that is resistance. That is its breakdown resistance level on a daily time frame. Knowing that is resistance, would you enter a new trade? Let's say right now it's 1716, maybe to get out 1861. I would not recommend it. I couldn't possibly recommend it. It's still bullish. It may even take out that level, but that's resistance out there, and you've got to know where your support and where your resistance is at. If we look at a weekly time frame here, and we just populate the chart, what this is going to tell us is if price can get above the level that we looked at in a daily time frame, 18 and change out here, then what price should do is run up into the 1950 area. The 1950, and here's your consolidation really inside of ticker OMER. Look at the consolidation between TD9 support and resistance. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're taking a look at Ocular Therapeutics. Ticker symbol here is OCUL. Actually, it's the weekly time frame chart that I have up on my screen out here. And so resistance is at the 541 level. It's a solid green line going across my screen. I just would need to extend it further. It extends out there. It is resistance. So you've got a TD 9-count pattern that is underway. Now, this is trapped price on a weekly basis, trapped between support and resistance out here. Remember, we were talking about how when the line color, the oscillator and change line changed from green to red, red to green out here, we eventually see a test of price. Well, what we saw last week and we're seeing this week here is a test and rejection. So that's a bullish test, but you still have resistance no matter what at 541 that price must close above in order for price to continue to move higher. Now, in the daily time frame, let's go take a look at what it's signaling to us. Maybe a different message out here. The message on the daily is different from this standpoint. This top with the Rhodes momentum indicator pattern out here, it did that on the trading day of February 24th when it generated that bear sash candle. Price then pushed its way down to its first levels of support, the bottom of its daily profile. That was at about the 491 area. No, it's not 491. It was, what is it? Oh, it's a new profile that's formed. Right around 494, give or take out here. Once price broke below that, it started to push its way down into 430. Now, today, you're seeing a test and rejection of Stevie's green line out here, and that would suggest that you've got some backing and filling. But as long as price stays about 430, if you're going to ask me, where's the entry point on OCUL, you would have to say 430. That's its breakout level. You would especially say that as long as price is moving down into that area with lighter volume than what you saw on February 28th out there. So I hope that helps you out with regard to Ocular Therapeutics. We've got a request to go take a look at the coffee futures, so let's go do that. KC0520 out here. For Mr. Bill, and he also wants to take a look at the ETF. So let's go ahead and get this thing populated. Come on, work with me. Obviously, lots of market activity out here. So when I take a look at the daily, oh, that's not right. Look at that bad tick in there. Okay, so Stevie, first, what is right about this is 116.35 was a breakdown level. And there was a slight close above it yesterday. This is the daily time frame, a close above it today. So it looks like what coffee is doing here is it's trying to attack the 130.95 area. So it looks like coffee futures are headed to that 130.95. That's in the daily time frame. The weekly is going to have that bad tick too. My apologies. But price is above Stevie's green line out there, which is bullish. It's inside a bullish structured profile from a weekly standpoint. And this would suggest a move, potential move up into the 138.79 area. Now, you wanted to take a look at let me do it right here. You want to take a look at Joe, the ETF. So let me go ahead and put this out here. So here is... Well, did that work? Did I do that, or did I just get a blank? What the heck? Come on, system. JO. Loading. Okay, it's loading, folks. Doesn't it know we got a show to do? We got things to do, places to go, people to see. What the heck? All right. Well, wow. All righty. So remember, everything happens for us, not to us. So why is this happening for me? That's the question, isn't it? It's happening for me so that I can go switch out of this, hopefully. Oh, maybe I can switch out of it by doing this. Leaving that in the background. There we go. All right. So just so happens, Mr. Bill, that I'm long coffee. So let me just simply go back and take a look at the trade for you. So here, with regard to coffee, we also have an A to B equals CD pattern. Coffee being the center panel out here. And so the price target, the first price target inside of coffee, well, I had it 118.65 on this chart. So there's an A to B equals CD to the upside. Your internet needs some help? No, Brian, my internet is, if I do a speed test here, you're going to see speeds lightning fast out here. I just have a ton of things going on, and doing the show and the things I have to connect to, such as Skype, which I wish Microsoft would really produce a better product than what they've got out there. Those are really the things that get in the way here. In any event. So with regard to Joe, that's the ETF to represent coffee futures out here. It looks like its next price target, Mr. Bill, would be 39.82. That's in lieu of some type of bearish reversal candle, should one form on the daily time frame to confirm some type of Gartley sell. But we don't have that right now. We don't know if that is what will occur. We've got price up above some resistance levels, so all of that looks pretty good. Looks like price of coffee or coffee wants to continue to move higher. Hope that helps you out. We've got a request to go take a look at Roku. This is coming in from Wayne. Let me go take a look at ROKU out here. Let's do it on my other system. ROKU. We have call ahead seating. So Wayne, just hold your horses. We're going to go out to Colorado Springs and speak with Scott. Scott, thanks for calling. Thanks for holding. How are you?
Hi, Steve. Been a long time.
Yes, but good to hear your voice. Good to hear your voice. So are you trading gold? You too. Are you trading gold? Are you trading gold?
Yes. I have gold on a 30-minute on a 9 count. Do you?
Well, we're going to find out here real quickly. GC0420. Let me pull over the chart, and as soon as this populates, we're going to know the answer to that question. Now, why it's taking so long? There we go. Yes, you are the man. Now, Scott.
I also have it at the last 1 count resistance.
Yes, you do.
Over at
1647.30.
Yes, sir.
Yeah. Hey, you're the man.
On the 27th.
You're the man. There's about a minute and a half left in this segment, plus the 2-minute wrap at the end. I'm going to hang up, and I'm going to let you go ahead and take it from here. All right? Sound good?
No, I love it when I'm able to follow you. What would be the next step in gold? Would you enter now short, or would you wait to see if it's going to get back below the daily OUL?
So I would have to defer back to the daily. And really the 5-hour time frame. So, and the reason is, let me just do this here. First, you've identified what could be a short-term top, but that means that price may only push back to 1634.70. And because the oscillator and change line is green out there, you've got to do the risk reward out here. Your stop would have to be above that 9 count pattern. But right now your target exit would have to be 1634. But because you had brought up those other time frames, and they're helpful to take a look at what's going on, if we take a look at that 5-hour time frame out here, what you and I were looking at, or what I was looking at this morning, was that price was running right up into Stevie's red line. And if this was only going to be a counter trend rally, that's where price really should have turned down. It's around the 1612 level. Now, price has moved up, and it is there's a new profile that formed, but it was really tagging, and price is above the top of that box too. That's the 1612 level right now. So that's always dangerous to, we're not trading at resistance right now on a 5-hour basis out here. And the daily, as I pull this over, well, here, it goes really back to this chart. And gold has been in a consolidation. Scott, would you do me a favor? We're about to go to break. Could you hold on, and you and I will close out the show together?
Yes, sir.
You bet. We'll be back with Scott in Colorado Springs, who uses Stevie's tools. You got to love it. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. We're on the line with Scott in Colorado Springs. We're taking a look at gold. So Scott, one of the things that I wanted to point out, and we're going to borrow one of Tom Obi-Wan's expression out here, is that when we saw the smash in gold last week, what we see out here is price stopped at support. You were great at identifying that TD9 count on the 30-minute chart for gold. And so we know that 1564.40 was a key level of support. It held. Oftentimes, if you can't bust things to the downside, it'll try to bust it to the upside. When we take a look with gold, as long as gold closes today above 1631.80, that would still be the expression that I would use. If we take a look at Goldilocks, we can see in the yellow area on this daily basis, you can see a consolidation pattern. When you break through a consolidation pattern, which gold has done, you make a measured move equal to it. Now, that's where gold had stopped out here. But maybe price is just simply going to move up towards the top of that consolidation level. So, Scott, those are the additional things I wanted to really point out to you as reasons to maybe just, even though on the short-term time frame you've got a top, maybe just to not take that short trade just yet. Too many other things on the other patterns here to consider.
Okay. I'm in at 1576, so I'm sitting pretty. So
perfect.
I'm not anxious to short it.
Got it. Okay.
So
sounds great. Hey, Scott, good to hear from you. Thanks so much, and thanks for using these tools out there.
You bet. I love them, Steve. Thank you for teaching us.
You bet. You bet. Let me get to Wayne's questions here real quick if I can. Wayne had written in and was asking about Roku, wanted to understand its range. So this is a weekly time frame chart here. The daily shows a TD9 count bottom back on Friday. If that low doesn't hold, then the next level for Roku should be $96. The other question was for Boeing out here. BA, let's see if we get this thing here to populate for us in just a few seconds. Please do it. Boeing, the next level of support here, this is the weekly time frame chart for it, is 262.76. 262.76. So we got all the questions in. Folks, thanks so much for being here, spending your time with me. Stay tuned. 2 more great hours of programming. You've got David White coming up next. Tom O'Brien from 3 to 4. Stevie Son, I'll be back with you on a wonderful Wednesday at 1 o'clock. Have a terrific day.
Since 1984.